Welcome to the Big Picture Retirement Show, where you'll learn what it really takes to have a successful retirement. With over 20 years of experience, your host, Rick Rivera of Safeguard Investment Advisory Group, has seen it all and is here to help you achieve your retirement dreams. This is the Big Picture Retirement Show.
Hello, everyone. Once again, you're listening to the Big Picture Retirement Show. I'm your host, Rick Rivera. Our show is really about sharing ideas and strategies that you can use. Maybe you are 5 years away from retirement. Maybe you are already retired. Tuning in each and every week, this show is going to give you tools and strategies that you can use that will immediately enhance what it is that you've been able to accomplish when it comes to your retirement planning. This way, we can give you tangible ideas, tangible strategies that we can share with you that will help you maybe to not only maximize what you're doing in your retirement planning or maybe your investment planning, but also how to minimize taxation, whether it be now or for when you retire, how to maximize what you're getting in your Social Security, eke out every nickel and dime you can out of that. Also, how to maximize your pensions, your 401k planning. Maybe for those of you that have special needs scenarios, how to maximize what you can leave to the kids or loved ones, again, especially if you have a special needs scenario, and minimize taxation to those heirs, maybe legacy planning. Some of you concerned about long-term care, income planning. I mean, the list goes on and on and on. And the big thing about this show is that we always want to we look at things from a big picture standpoint. What I mean by that, it's real easy for someone to give you some sort of investment advice, but the challenge is if that person is not looking at things from the holistic standpoint or big picture approach that we talk about so much on the show, that investment advice could have a negative impact on your taxes. It could potentially have a negative impact on the way your Social Security is going to be taxed, or possibly how your pensions are going to be taxed. Or maybe they gave you investment advice and now you're overpaying in fees. Or maybe you're taking on more risk than what you thought you were, that you wanted to take. Or maybe it's having an effect on your income planning later on. Or minimizing what you're going to be able to leave to your beneficiaries. Again, if you have a special needs situation, that might be critical as far as your goals and your objectives. So there's more to planning and retirement planning than just, Googling, hey, what should I do in retirement planning? And you read some article that says, hey, you should be saving 10% of your paycheck, or that you should be, planning on living on at least 80% of your salary, or maybe you should have $1 million saved by retirement. There's a bunch of general rules out there. And again, they're just general rules. A true plan is going to be designed around you and your specific goals and your specific parameters, your specific objectives, because everybody's different. And for some people, hey, saving 10% of their salary, they may not need to do that because of other scenarios that they have going on within the dynamics of their situation. Some might need to save more than 10%. Others may not need 80% of their salary. So why are they stressing over that? Others may need more. And again, everything all ties in together. So this is these types of things that we try to share with you each and every week and help you to understand. But at the end of the day, it's always important that you sit down with a good advisor that specializes in this area, that is seasoned, that has lots of experience, seen all kinds of markets and all kinds of situations. And then that way they can sit down with you and actually kind of point you in the right direction, or at least give you some food for thought. Now, if you ever have questions about any of the strategies that I talk about here on the show, or maybe I'm talking about certain things on the show and maybe you feel like, hey, you know what? I know Rick's bringing up a lot of good points and things maybe I haven't heard of before, but I'm not quite sure if this really pertains to me. Or maybe you have a question outside of what I'm talking about on the show that's regarding your retirement planning. Give us a call. It won't cost you anything to give us a call. I'll be happy to talk to you personally. The staff can set up a quick 15-minute strategy call with you and see if there's, we can give you some pointers to help you out. That toll-free number to give us a call on is 800-700-1980. Again, our toll-free number is 800-700-1980. You can also reach us on the web at safeguardinvestment.com. Again, that's singular, not plural. It's safeguardinvestment.com. And you can also, hop on our website, tell you a little bit about what we do. And then, of course, there's some webinars we have been conducting. So if you care to tune into any of our webinars, you can watch it from the convenience of your home. Just give us a call or hop on the website to RSVP for those things. It doesn't cost you anything. You just give us a call, toll-free, 800-700-1980, or reach us on the web at safeguardinvestment.com. Now, I got a lot to cover today, but real quick, before I get started today, we want your input. And I do get input each and every week from our listeners, and I really appreciate it. But I wanted to do kind of a new test today and see what other input I can get, especially from new listeners. So what we're going to do today is we're going to offer a special. If you call in with a topic that you would like us to cover on the show, and I use your topic next week, we're going to send you a $10 gift certificate to Starbucks. So give us a call right now. If there's a specific retirement question, again, that has to do with, your retirement planning, it could be about 401k, taxes, pension, whatever it is, and I use that topic on next week's show, we're going to send you a gift certificate for $10 to Starbucks. We really do want your input, again, so we can talk about things that are important to you rather than a bunch of things you could care less about. So the toll-free number you'll dial in order to take advantage of that is 800-700-1980. Staff is standing by. Let us know what topics you would like me to discuss. And then again, our staff will go ahead and put into the mail to you a gift certificate to Starbucks for $10 if we use it on the following week's show. All right, with that being said, let's jump right into it. And what I want to do is I actually had several calls on several different topics. So I'm going to see how quickly I can squeeze in these different topics. I had somebody call me about, pensions. Rick, how can I maximize my pension? Had somebody else call regarding Roth conversion, somebody else around long-term care, and then also reverse mortgages. So I'm going to try to cover as many of those topics today as I can. And again, this is going to be some good information for all of you. Keep in mind, it's general information. So if you want specifics, give us a call, 800-700-1980. So let's talk about pensions. Some of you right now, because of being laid off, for whatever reason, you have separation of service from your employer. So now, we're getting calls. Hey, Rick, what do I do with my pension? What do I do about my 401k? What are my options? Well, here's the thing. You don't want to jump into anything right away. What you want to do is, number one, evaluate where you're at. Now, this is always good to do with an advisor that can sit down and ask you appropriate questions, figure out what your income is, what your expenses are, and then figure out what your goals and your objectives are for the future. But right now, you may need a bridge to cover you because, hey, listen, I'm out of work. So what I was saying last week, and for those of you who didn't get a chance to tune in, right now, the IRS is allowing you to pull money out of your IRA and your 401ks, to offset your living expenses or whatever expenses you may have from being laid off. And the advantage now is that there is not going to be a 10% penalty if you're under 59 and a half. Because normally if I pull money out of my IRA and I'm under 59 and a half, I'm subject to a 10% penalty. Now you're not subject to that anymore. So you still have to pay the taxes on the money. But to add a caveat to that, what they are doing is they're allowing you to spread the tax cost over 3 years, or if you prefer, you have 3 years to put the money back without a tax consequence on yourself. So if you just got laid off or you've been laid off, and let's face it, unemployment may not cover all the expenses, and you need something to fill in the gap, and you have no other alternatives, and emergency money ran short, and you have to dip into the IRAs and the 401ks. And again, we only want to do this as a last resort. So if we have to, the advantage now is got 3 years to pay the money back. There's no 10% penalty by the IRS if you're under 59 and a half. And then, of course, if you can't pay the money back, you have 3 years to spread the tax cost. And whatever money you can put back, You may not be able to put it all back, but if you can put a portion of it back in during that 3-year period of time, that's less money you have to pay taxes on. So win-win situation. Now, again, it's something that we want to do as a last resort, and sitting down with a good advisor will help you with these strategies. So I wanted to point that out because I know how important it is. Now, if you have questions, and it's always important to sit down with your tax advisors or an advisor that specializes in this area to make sure that, you document everything properly and everything is done, you dot your I's and cross your T's. If you want help with this, or you want to know if this is a right strategy to use in your situation, don't be afraid to give us a call, toll-free 800-700-1980. Again, that toll-free number is 800-700-1980. What I'm going to do is I'm going to take a quick break. When we come back, I'm going to discuss long-term care and also reverse mortgages because I've been getting a lot of questions on that as well. And then I also have a special promotion I want to introduce to all of you. So stay tuned for the special promotion and also these next two topics because it's going to be some good information that not only can help you, but you may have a friend or a family member that could use this information. So I'll be back here in about a minute or so.
You're listening to the Big Picture Retirement Show with Rick Rivera. For more information about Rick and the Safeguard Investment Advisory Group team, go to safeguardinvestment.com. While you're there, you can also download educational retirement guides and sign up for an upcoming seminar. That's safeguardinvestment.com. Now, back to the podcast.
Okay, and we're back. If you're just tuning into the show, you're listening to the Big Picture Retirement Show. I'm your host, Rick Rivera. And again, if you have any questions regarding any of the topics that we're talking about on the show here today, just give us a call, toll-free 800-700-1980. I just wanted to let you know what I'm going to do this week. Any of you that have suggestions for us on what topics you would like us to cover, give us a call. If I use that specific topic next week on next week's show, we're going to send you a $10 gift certificate to Starbucks. So again, we'd love to get your input. Give us a call, toll-free 800-700-1980. And so before we took the break, I left off on, actually, I was really talking more about 401ks, IRAs, things of that nature. I know I mentioned the word pensions, but I was really talking about 401ks and IRAs as far as how to pull money out now if, God forbid you need to. Again, we always want to leave that as a last resort. Due to COVID this year, you can actually pull money out, spread the tax cost over 3 years. Number two, if you do pull the money out, there's no 10% penalty by the IRS if you're under 59 and a half. And then, of course, you also have the ability to pay that money back if you choose to over the next 3 years. And whatever money you put in, again, will minimize your taxes. So if you pull X amount in and over the next 3 years, you can only put half of it back in, then you'll only pay taxes on the portion that you didn't get back in. So again, that's something that you want to sit down with a good advisor, your tax preparer, and make sure that you're dotting your I's and crossing your T's on that. Again, if you want us to sit down with you directly and help you with that, or maybe give you some suggestions just to even see if it would even make sense in your situation, give us a call, toll-free, 800-700-1980, and we'll be happy to help you with that. Our staff can even set up just a 15-minute strategy call with you over the phone, and maybe you have questions even outside that topic. So now what I want to cover now, because again, we've been getting some questions on, is long-term care and then also reverse mortgages. So let's cover long-term care real quick. Here's a scenario. For those of you that are already retired, they're like, hey, Rick, I feel like I'm in a good place. My income is, in a good spot. I got good, pensions and Social Security coming in. The investments are, set up, appropriately. And I think I'm doing good there. But the problem is, or my fear is, I know I won the comfortable retirement, but my fear is, God forbid, there's a medical emergency and I need, or my spouse may need, long-term care. And I know health insurance doesn't cover it. And if they do, it's very limited. Because for some of you, let's say you're on Medicare or you have health insurance, that'll cover you for maybe 60 or 90 days or so. But if you're in there longer than that, the bill is on you. And at $5,000, $6,000, or maybe even $7,000 a month or more, you can go through your savings real quickly. So now I've won the comfortable retirement, but I didn't have my long-term care planning in place because I wasn't looking at things from a big picture approach. And now the comfortable retirement I thought I had is gone because of medical costs. And because I was a good steward of my money and I saved assets and I do have assets, I don't qualify for Medi-Cal. So the only way Medi-Cal is going to pay the bill is if I spend down all my own money. So the challenge is that with long-term care, for many people, let's face it, it's not cheap. And most people do want to stay at home. So the challenge with long-term care is, number one, we know it's not cheap. Number two, hey, listen, in many cases, any money you put into there, if let's say you never, go to a long-term care facility or you take advantage of or never use it, let's say, that money you put in there is lost. You pass away. Well, it's not like they're going to give it, whatever money you didn't use, they're going to give it to your beneficiaries. If you decide, hey, listen, you know what? They keep raising premium costs on me and, this thing is really, hurting my budget each and every month, then you cancel it. Well, you don't get your money back. So, again, we also have to look at advantages and disadvantages to everything. So the point that I'm trying to make is that now there are programs available where you can actually put money into a long-term care protection plan. If you don't use it, you can actually pull the money out that you put in, and you might get like savings account interest, nothing to write home about, but you'll get some savings account interest on your money. But at least if you decide to cancel at any point in time, you can at least get your money back out of it. If you don't touch it, let's say you put the money into the program and now you pass on, whatever money you didn't use, that money is multiplied as a death benefit to your heirs tax-free. And then, of course, if you need long-term care insurance, whether you need somebody to come to the home to take care of you or do some of the heavy lifting, or you need to go to a long-term care facility, well, then you have coverage to cover you for that, to, again, minimize or eliminate that's your own spend down of your assets. So you don't have to put your retirement in jeopardy. Now, again, I'm going over this very generally. There's a lot of different programs and there's different strategies on how you can attack this issue if it's a concern of yours. But what you want to do is sit down with a good advisor, again, that specializes in this area, that can kind of guide you and share different options that might be available to you, explain the advantages and disadvantages of each, and see what's going to fit you more like a glove. So if this is something that, hey, this is something that I want to address, or at least know my options on to protect myself from this, because just because we're living longer, let's face it, not everybody's living healthier as well. So again, if you have questions on that specific topic, you can also give us a call. I'll be happy to help you and guide you in the right direction on that, or at least point out, give you some pointers you should be looking at. Give us a call, toll free, 800-700-1980. Toll free, 800-700-1980. And we can set up a strategy call, real quick strategy call, and I'll go over that with you and kind of give you a little bit more specifics on that. But I just wanted to make you aware that there's a variety of things you can do as far as to protect yourself from that. Now, again, if you're just tuning into the show, you are listening to the Big Picture Retirement Show. I'm your host, Rick Rivera. Now, let me jump into reverse mortgages. Reverse mortgages is a situation, I know a lot of you probably even seen the commercials on TV. Does it make sense to do? Common question is, hey, am I giving up my home or my house? So let me just talk to you in general about how these things work. What happens with reverse mortgages, people will use this in order to offset or maximize their retirement, because some people maybe didn't quite save as much and they need something to offset, or maybe they even need to offset, care that they may need that medical costs aren't covering. So through the reverse mortgage program, what it is a government program backed by FHA, and what it does is it allows someone that's 62 or older that has equity in your home to borrow money out, and the advantage is you can use that money, because it's technically considered a loan, use the equity in your home to offset your retirement planning, emergencies, whatever you need the money for. The advantage of it is that you don't ever have to worry about paying that money back unless you decide you're moving out of the home, you're going to sell it, or obviously when the final spouse passes away, then the loan will be paid back at that time. So, quick example, let's say you have a home worth $500,000. Based upon age and some parameters, let's say they're willing to give you $200,000 to offset your retirement. So you're going to take $200,000 of equity. What will happen is there's no payments on that money, but it will be accumulating interest over time. So let's say 10 years later, that $200,000 with interest accumulation has grown to $400,000. Let's assume the house value now 10 years later is, instead of worth $500,000, is worth $600,000. Final spouse passes away. That $400,000 debt to the bank, the home can be sold. The $400,000 debt would then go and be, the proceeds from the sale would pay off the bank. The equity goes to the kids, the family. If there is no equity in the home, well, then what's going to happen is, let's say the home is worth $300,000 and what's owed is $400,000. Then the most the bank can get is just the home. So the home will be sold, but the advantage, because it is FHA sponsored, FHA guarantees that amount to the bank. They can only get the house. The bank cannot come after any of the other assets. So if you have 401ks and IRAs and things like that, the bank can't attach those things. So now, again, I know I'm talking about these things in general, and there's a variety of different reverse mortgage options and different scenarios. And again, everybody's situation is different. If you want advice on this, or you have questions on these specific topics and want to know how it would fit in your situation, because there's different ways to approach these things, give us a call right now, toll free 800-700-1980, and we can answer your specific questions on that. This brings me to the close of the show. The show always goes by so fast. So again, anyone that has, I want you to give us a call right now. The promotion that we're doing this week is that if you give us a call, tell us what topics you're interested in me covering on the show. If I use your topic next week, we're going to send you a $10 gift certificate to Starbucks. And then, of course, if you do have questions regarding your own personal situation, feel free to give our staff a call, and they'll set you up with a personal phone call with me directly. And I can, maybe give you some tidbits on what you can do in order to enhance your retirement planning. So again, there's no cost or obligation to that whatsoever. Just give us a call, 800-700-1980. You can also reach us on our website at safeguardinvestment.com. Again, I'm Rick Rivera. Have a great weekend, and I look forward to talking to you all next week.
Firm offers insurance services. Safeguard Investment Advisory Group, LLC is a registered investment advisory firm. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Safeguard Investment Advisory Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Safeguard Investment Advisory Group, LLC. This radio show is a paid placement.